Welcome everybody to the webinar Trading Psychology and Discipline with Thomas. And this is our weekly webinar where we will be discussing different things regarding the psychology of trading. I'm Thomas Megan, a senior account manager in AvaTrade. I have been working in AvaTrade for the last few years, and during that time I had the opportunity to work and assist many clients, and I will be happy to share with you today some of the main issues and some of the main questions that the clients are having. We start with the risk disclosure. Any capital markets and trading information disclosed in this webinar is provided for informative purposes only and should not be constructed or applied as investment advice, recommendation, or suggestion. CFDs are a complex trading instrument and come with a high risk of losing money rapidly due to 57% of retail investor account lose money when trading CFDs with this provider. You should consider whether you understand how CFDs work and whether you can afford to take the high risk of losing your money. Please read our full risk disclosure statement on avatrade.com official website. So today the webinar agenda, first of all, we will be able to discuss some of the trading basics, profit and loss calculation, order types, trading psychology, risk management, platform essentials, account types and VIP benefits, key account metrics, hedging, education and improvement in general. If you have any questions, you can also send the questions on the chat box where it says questions. So I'll be happy to answer any question that you may have. In general, trading is divided by two main subjects. You have the analysis part where you indicate what will happen to the value of the asset, and then if your indication is correct, you are making money. If the indication is not correct, you are losing money. And also you have the type of psychology, that this is also very important. This is whether you have a certain plan that you are following and whether you are emotionally able to follow the plan that you are setting for your account. This type of webinar that we are doing it on a weekly basis. So if you did not have a chance to go through the previous webinar, you can also watch the recording on our YouTube channel. And some of the recording we talk more about different psychology factors. Some of the webinars we talk more about the actual trading and how to mitigate your level of risk and stuff like that. So first of all, you can see here, this is the main page. When you click on the web trading interface, you'll be directed over here to the WebTrader. The WebTrader, on the left top, you can find my account, payment. Also on payment, you have an internal transfer option where you can transfer money between different accounts. And under accounts, you'll be able to see all of the account types that you have. Now, if you currently do not use a demo, do not have a demo, you can just click here, then account, demo, and then you'll be able to set up another demo account. You just click submit with the currency that you wish to trade. About the currency, some people asking me what is the difference between different account types, if you have a ZAR account or if you have a Euro account or whatever account type you have in terms of the currency. The main difference is, first of all, it depends on you. If you want to transfer money in dollar to dollar, so you will not be paying the conversion rate from dollar to dollar or from euro to euro. Okay, so this is one difference between the different account types, is the way that you are funding the account. Okay, and if you have a dollar account and your AvaTrade account is in euro, it means that you will pay the conversion rate to convert it from dollar to euro. Normally, I would advise to, if you can, have the same currency as your bank for the transaction, if it's possible. It doesn't necessarily mean that the same account you are transacting money to will be the same account you are trading. Okay. Now, for the trading itself, the base currency will represent, I will show you now. The base currency also, it depends on the instrument you are trading with. Okay. So if, for example, you are trading on, let me go into one of the demo. Let's say you are trading on an instrument that is based in US dollar. So there will always be conversion, okay, from dollar to whatever your account-based currency is. So if your account-based currency is in euro, so when you open a position on, for example, a US Tech 100, you will always have a conversion fee that is updated automatically. Okay, it's not the conversion fee; it's a conversion from a dollar to your base currency, if it's euro. Okay, so I will just share with you the example. If we click here, search for symbol, we look for whatever we want, and then here we can see the instrument that we want to trade on. Over here you see the flag, and here instrument details, we see the USD, okay, the currency. If we try to change something, so as you can see, if you change from US Tech 100 and then you switch it off to the FTSE, which is correlated with the UK market, you can see now the currency have changed to pound. Okay, so what will happen when I open the position? There will be constant conversion from the pound to my dollar account. Okay, so this is entirely up to you. I'm just sharing with you something that is substantially important to some of the trader, and I show you that many people do not really know how it works. So now you know, every time you are trading, you can click here on the instrument detail, and then you'll be able to see the currency of the asset that you are trading on. And then you know what will be the conversion from what to what, from pound to dollar. Specifically, my account is in US dollar. Okay, so this is just something I wanted to share with you about the conversion. And now again, we go back to the account. Let's say if you don't have a demo, you can also set up a demo account to practice a little bit. So while we are having a webinar, you can also implement some positions similar to what I implement on the webinar, or you can implement any position that you wish. But it is substantially important that you will practice and that you will be familiar with our platform and the way the platform works, because this is something that the majority of people, they don't really know everything there is to know about the platform, about let's say calculation of the profits, calculation of the losses, calculation of the margin, how to hedge positions, even what is a hedge position, that we will cover today. So now we can continue with the presentation. So this is the main page. Over here we cover some of the basic, okay, balance, this represents your closed position. Every time you have a closed position, the balance will be updated. So for example, if I close the position in a profit, okay, what do you think will be the balance after that I close the position in a profit? The balance will go up. If I close a position in a loss, so the balance will go down. It doesn't mean that I'm losing money, okay? Because the balance, it represents the closed position. So it's very important that you recognize that, because the real factor that I'm looking at is actually how much money I'm having in the account and is equivalent to the equity, okay? The equity represents the real value of your account. So if you were to close all of your open positions, you will be left with the equity, okay? The free margin also is very, very substantially important. It represents the amount of money you have in the account to open new positions, okay? So if you want to open a new trade, let's say we go to FTSE, for example, and then you can see the margin impact, the required margin. Okay, so I want to check what position I can open here. So the calculation will be free margin minus the margin impact is equivalent to 7.1 lot. This is the biggest position size I could open. And it means that I'm opening a trade with the maximum exposure possible. Okay. What does it mean, maximum exposure? It means that I'm going to have the maximum amount of profit or maximum amount of loss per each point the market moves. Okay, with me or against me. This position is quite big. For the sake of the example, I will just open it. You will see when I open the trade, it will start with the minus, okay? Because of the spreads for the position. So now you can see here, after me opening the trade, I have a negative of 240. I will keep this position going, so you'll be able to see what is happening with this specific position after some time. But here you can see the profit and loss, the symbol, what did I buy, what is my size. You can see on the right top my margin level in percentage. This is also very, very substantially important, because the margin level will represent when your position will be closed due to a stop out, okay? It means that if you do not have enough money in the account to keep your position going, the position will be closed automatically. At what percentage it will close? It will be closed at 50% margin level, okay? So when this position will reach 50%, the position will be closed, okay? If you do not want your position to be closed, what you can do is either you add more money to the account to keep the position going, okay? And either you just trade on a smaller position and you trade with a smaller exposure. In such case, you will be less likely to get into stop outs, okay? So specifically here for the example, you can see I'm on 95%. I will not say if it's too risky or if it's not risky. Over here, I took the maximum exposure possible, okay? This is the biggest position I could possibly open, and therefore I don't have any more margin to open new positions, okay? What is the margin level that is recommended? It depends on you. You are the trader, so you are in charge of the account. You decide whether you want to have below 100% or be above 100%, above 200, 300, 400%. The larger percentage you have here on the margin level, it means you are taking a smaller exposure on your position. So it means the positions that you are opening is relatively smaller than the whole amount of money you have in the account. Okay? So if I were to open such a small position, you will notice my margin level would be way higher. Okay? So that is something regarding the margin level and the way you monitor it is very important because many traders, they keep getting into stop outs again and again, and because the position size that they are opening is relatively big to the amount of capital they are trading with. Okay, so for you as a trader, you can decide if you are more conservative with your approach, and if you are more conservative, you could minimize your lot size. You could trade on a smaller level of risk. But if you like more risk, you can also trade on a bigger position size, and you can also trade with a bigger level of risk. So then the profit as well that you will be having will be more substantial. Okay. If you have any questions, you can reach out just on the question box and ask any question you may have. So I explained to you how to calculate what kind of position I will be able to open. This is the way you can calculate. You just type whatever you want to trade. You open the new order page, and the system will tell you automatically whether it's something you can open or not. So we covered the balance, free margin, the equity, the used margin. We covered basically the used margin is equivalent to the amount of margin that was used to open the positions. It means that if you close all of your open positions, you will be left with the used margin on your free margin. This is your margin that will go back to the free margin. Regarding here for the non-EU client, I'm sure that you noticed that there is a change on the margin level when it drops below the 50%. This is a new change. So when it will drop below 50%, you will be triggered with the stop out. So this is also something to take into consideration. I'm sure that you heard what is happening in the markets these days. So due to that, we have decided to reduce that to 50% among many other brokers. So that when the margin level is below the 50%, it will be closed. Margin increase, how do you increase your margin? Whenever you add money to the account, it will go to the free margin and you will have more margin to trade. Or whenever you close the position, the used margin will go back to the free margin. So you could place more orders. Hedging is very nice concept. Okay, what happens when you hedge? When you hedge a position, one position will be at some point profitable, and the other position at some point will be in loss. You open a position on the same instrument, different direction, one buy, one sell, and the same position size. So I will share with you how it looks like when you want to hedge a position. We keep this account so I can share with you what happened to the full exposure position. Set up another demo. And basically, what is the hedge? This is the strategy that many traders they would like to implement when trading, because of the fact that when you are opening a hedge position, one of your positions will basically be making profits, and the other position will be in a loss. So this is something that some clients they like to secure a certain pricing point, and then they know that the amount of risk that they are having is more limited due to that hedge position. this is something to take into account. Additionally, as you can see here from the example, when I do open the hedge position, the required margin is 0. So the only condition for you to hedge a trade, you need to make sure that your margin level is above 100%, and then you'll be able to hedge your position. This is the new order page. Some of the foundations that you should know, buy and sell price. The difference between them is the spreads, the lot size. This is the position size that you are opening, starting with a minimum of 0.01 lot. Please take into account that on MT5, you can trade also nano lot on some of the instrument. Margin impact I mentioned already is how much margin required to place the order. AVAProtect, many people are not very familiar with this kind of product. This is a product where you can pay a certain amount of money in advance to have a certain protection on your position. You choose a duration, like you see here, the duration. You choose from 1 hour to 2 days, and then the system will calculate for you the price of the protection for the duration that you have selected, if that makes sense. So this is also something that some of the people are asking. So you should also get yourself familiar with the different type of products that we are having, in case you find it useful. I will share with you how the AVAProtect will look like. You cannot see that option available on a demo. So let's go. So the product is available on currencies, gold and silver. So let's say if I just select gold for the sake of the example, I will be able to see what is the price because of the recent movement of gold, and it's very volatile. So also the prices on gold are also high right now because of the fact that the movement is very, very high. So using this product, you know how to limit the amount of loss you can have for the duration that you have selected on the AVAProtect product. You can choose the duration that you would like, and then you need to have the margin to pay for the protection, the price, and you also need to have the margin to place the order on the AVAProtect. Once you execute the order, you know that you have this protection. And what this protection give you, if you lose money within the duration, the money will be reimbursed automatically to your account. The money that you lost, the negative floating. But if you don't have a loss, so obviously you will not be reimbursed. I'll just share with you some examples. You can see here one lot on gold, 0.01 and 0.01. What is required to place an order? You need to have the free margin to open the trade, and you need to have the free margin that will be higher than the protection cost as well. So the calculation is the protection cost plus the margin impact. That's what you need to have in your account. So if I open a position with, let's say, one lot, you see I cannot open the position. So 0.5 I can open because it's 1.2 thousand plus 5,000 is the price of the protection. Let's see if we go to 0.7, 0.6, 0.55, 0.57 is the maximum. So 0.56 is the maximum amount I can open on this a position on gold, because of my free margin is equivalent to 6.9 thousand, and I need to have 5.6 thousand plus the margin impact, which is equivalent to $1.3 thousand. When will the charges appear on your account? Immediately when you place the order with the protection, you will see the charge for the AVAProtect. Our losses will be reimbursed from your account under two conditions. First, if you close the position during the protection period. And second, if the protection period expires with a negative floating, the loss will be reimbursed automatically. Only losses that occur inside the protection time are covered. So if by the end of the protection you want to continue the coverage for the protection, in that case you need to close it and open a new position with another AvaProtect. How do you make profit with AvaProtect? You need to make more profit than the cost of the protection. Okay, so if you pay, for example, let's look at this example, 0.56. Okay, we pay 5.6 thousand for the protection. So in order to make profit, you need to make more than the 5.6 thousand price. Also, you have the spreads into account, so you need also to take into account the spreads, and you need to make profit more than both of them in order to have profit on your position with AvaProtect. The benefit of this is that, of course, you can limit your losses to a certain extent, that you can see how much is the price for this, and then you can see if it works for you or not. What happens if my position continues after the protection expires? Any losses after the protection expires are not reimbursed. Only the negative floating inside the protection duration is covered. If there is no negative floating, there will be no reimbursement for the position. Here I gave some examples. We covered it also in our previous webinar. So if you would like, you can go ahead and place an order, even on the smallest exposure, to check how it works. Also, we have account manager in Ava. Normally, we do have different account manager for different account types. So we have some people who's working as VIP account manager. So if you have quite a big account above a certain amount, you can request for like a more VIP account manager. If you have above 1,000, you can also have a regular one. But any of you who want to get a call, you can ask the customer service, can I talk with an account manager? And they will ask someone to give you a call to assist you and to explain to you more about us and how to navigate through the platform. We cover pending order also in our previous webinar. Pending order is when you open a position based on different values, and the position will be open when the market reach the value that you set. We'll give you a short example how a pending order will look like. So we click on execute when price hits, and we tell the system, okay, please open my order when the price of gold reach, let's say 5,000. And then if the price of gold reach 5,000, the system will open the position automatically when gold reach 5,000. Additionally, you can also set take profit and stop loss. Okay, these two have embedded inside a margin calculator is on the top over here, and here you have a pip calculator. Okay, so let's say you want to limit your losses, okay, to let's say $1,000. This position is quite high. So you see $1,000 when the price of gold reach, let's just change this one. $4,982. We can play between the buy and the sell to see the difference in the values as well. So now you see $1,000, the price of gold when it hit 4,775. It's moving rapidly. So when the price of gold reaches this price, you will lose approximately $1,000 with 0.2 lot. Okay. If you change the exposure, you change the lot size, so also the price will change. So either you can enter your price, either you can enter possible loss. Same thing about here, possible profit. You can enter, and the system will tell you at what price of gold you will make that amount of money. For you to know, some people are asking whether they should set up a stop loss or whether they shouldn't be placing a stop loss. This is something entirely up to you. Okay. For you to understand what is a stop loss order is that when the system will try to execute closure of the position at the price that you set, okay, it doesn't mean that necessarily you'll be able to get the exact price that you want, okay. We cannot guarantee the price of your stop loss, okay. So the price is based on the market. So sometimes it happens that when a client sets a stop loss, the position will not close exactly at the stop loss price they set. Okay? Why? Because the market is moving. The market is moving very quickly, and it happens that the market sometimes have a gap. So instead of reaching from 4.7, let's say the price right now is 4.814. So instead of reaching 4.764, it happens that the market closes, let's say at 4.700. This is the price that is available. And in that case, you will have more loss than the price that you set for the stop loss. Okay? If you wish to avoid it, you can just, you don't put the stop loss, or put the stop loss and take this into account when trading. It is important because at some point you need to understand the system is trying to execute the closure always at the price that you set, and if you use a lot of stop loss, you will see that the majority of the time there's no problem. It's executing at the price you are setting beside a very big volatile moment. So this is something we covered regarding the stop loss, and that we do not provide the stop loss guarantee in AvaTrade, and it's something that is should be familiar. Also, you need to have margin to place a pending order. Over here, you can see example how pending order looks. What is take profit? We also covered in our previous webinar. And these are different examples. When you are trading on small exposure, 0.01, 1 lot, 10 lot, and let's say 100 lot. So we covered some of the basics. We are normally covering some of the basics also in this webinar. I don't see that I have many questions, or if you want, you can feel free to ask any questions that you may have that you would like to cover. I would like to talk more about the psychology of trading and what you can do to improve upon that, because as I mentioned earlier, there is the analysis part where you are deciding what instrument to open, and then you deciding when to open the position, and this is the strategy regarding your position. Okay, so for this subject, it is divided by the two different sections: the technical analysis that I will show you here. The technical analysis is based on the charting. Okay, so you can see here the chart. You can see the candlesticks, let's say 15 minutes, 30 minutes, 1 hour, okay? And the candle represent each candle is the time that you select. So each candle is 1 hour, each candle is 2 hours, 4 hours, up to 1 month, okay? So the further you go, the more history you will be able to see. So this is the technical side that you are doing different analysis, you're using indicators. Some traders, they even like to have a robot, trading robot, that is called the EA, expert advisor. Some people are they design their own robots and they hire someone to build it. Okay, you also have MQL community. You can find people there that can build a robot for you based on the parameters. So this is a good way for you if you have a problem with the psychology and you have a problem with implementing your strategy. You can set a robot. Okay, you can set yourself a robot, a trading EA, and the EA doesn't have emotions. It's going to open the trades without emotions, without the need for psychology, because it's a robot, and you just design it to open the position according to your strategy. So for psychology, this is something that you can use. Also, you can buy an existing robot, but then you don't really know what is the settings they set for the robot and based on what it's gonna be opening the position. So essentially for you, this is also an option to get yourself with an expert advisor. So this is the type of analysis that is based on the technical. You also have the fundamental analysis is based on the news, big events that are happening in the news that are also influencing the market. This is more relevant to the subject of fundamental. And then we have the psychology itself, that this is whether you are as a trader are going to follow the strategies that you are setting, and whether you're going to have the discipline to follow the strategy that you are setting to yourself. And a discipline can be determined by different factors. First of all, we have the exposure, how much risk appetite I want to have for my position. So I need to know in advance how much am I willing to risk on a position, and even writing it down, okay, before opening each position is important, because you have a record, okay, on a system. Either you put it in a Word file, you put it in Excel sheet. You need to have a certain system where you keep your thoughts, or you keep your positions in a certain record. Okay, so you decide before opening the position. You set a plan. Okay, if you do it with an Excel sheet, so you set the plan when you will be opening the position. Okay, what is your expected profit? What is your risk appetite? Okay, you can set the risk appetite in amount. Okay, so you want to limit your loss to 100, 1,000, or any amount that you choose. Also, you can mention how many trades you want to open on a daily basis. Okay, or obviously weekly. It is really up to you how many trades you want to open. You also need to mention what is the lot size of each position that you want to place, whether you want to trade a big position or a smaller position. And you build yourself a certain system that will allow you to have a disciplined trading. Okay, we call it in the professional language, you call it a trading journal, that you are actually journaling your positions. Okay, so you can set up a trading journal even before you open the trade, or you can also journal the trades after opening the position. But it is important that you open according to a strategy. So you can also have a little box on your journal whether you open the position based on a strategy. Okay, so let's say your speculation on the journal is that the price of copper will reach, I don't know, whatever price you think, okay? And when the price reach that price, let's say you set a pending order, okay? And on the pending order, you decide what is the take profit and stop loss. And you explain to yourself on the journal, okay, I think copper will reach this point. I think copper will reach this point. I'm going to cover my loss at 5%, 10%, or up to $100. I'm going to cover it with the stop loss. And you're writing a plan, okay? And then you're ticking a certain box of each category, each relevant subject that is relevant to the plan, okay? So if you use a certain price, so you tick, okay, I reached the price, or if you use a certain announcement on the market, so you write, okay, I open the position based on fundamental analysis. I think the price will reach a certain price because of a big news, because of a big announcement that is relevant for copper. So you decide what you want to have in your journal, and you decide how to manage it, but it is important that you manage it so you will be able to keep a certain record for your trading. And I think this is very important for you to have. And today we managed to cover some of the things that we cover in our previous webinar. I see so far you don't have many questions. If you do, you can ask now before we are going to end the webinar. I hope that you enjoyed our webinar today. We've discussed some different factors. Some are more for beginners and some are for more advanced traders. And I just showed you, I said I will share regarding the position that we initially opened. But these are the positions I believe we opened in our previous webinar. You see we have a fully hedged position on the US Tech 100. Okay, you can see that our buy position is losing $15,000. Okay, and our sell position is in profit. Okay, what do you think will happen when I close the sell position? My balance, you will see it will adjust to a bigger pricing point. $25,000 in my balance, but my equity is still at this point. So what happened here? You see, I opened a buy position, the price went down, okay? So my hedge position was making money, okay? And now my buy position is basically in a loss, okay? So it means that if I open right now another buy position, US underscore tech 100, if I open another buy position, let's say I go with the same one we had before, I think it was 17. We'll just share with you what we just did. So you can see here, I'm taking the loss, okay? I close one position with 12,000, okay? And this position is in a loss of 15,000. So how much did I lose? I lost $3,000, okay? And what did I learn from this is that the price of US Tech 100, it went down, okay? And that's why I have a loss, okay? But this is not the loss that I'm having because I made profit on the other position, on the hedge position, okay? And now I open another position, okay, with a different pricing point. So this position is in a lower pricing point than this position, okay? So we will go on our next webinar, we'll review again these two trades, okay? And this is just an idea for you to learn how to secure different pricing point because for us as a trader, we want to trade when the price of a certain instrument is low, okay, and we believe that the price is good and it will go up. We secure a certain pricing point, and if the price is going up, we can make profit. But even if we are losing money, okay, we know that there is a certain percentage of drop, okay, and sometimes we can use the percentage of drop for the next position that we are going to open, okay. So if you have a certain downfall on one position, you can just secure another position, okay, unless this market will gonna keep going down and down. But in that case, previously, you can see that we were hedged. Now we don't have any hedge on these positions. So I hope you enjoy the webinar. Okay, if you would like, you can join another webinar we're going to have next week. And I wish you all a successful trading journey with AvaTrade, and I wish you all the best. Bye for now. Take care, and have a great weekend, everyone.